Hey everyone, and thanks for jumping back into the Equityverse. Today we're going to talk about the S&P 500, and we're just going to be looking at general seasonality. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, seasonality is something we've discussed for the S&P for a while. A lot of times, seasonality for the S&P will reverse course sometime around mid-March. So what we've previously talked about for the last month or so is finding unfavorable conditions between February OPEX, that's options expiration, and March OPEX, March options expiration. March options expiration is just under a week away. So I would expect, at the very least, some form of a counter trend rally to occur within the next few weeks, right? It doesn't have to be immediate. It's always possible that the S&P goes a little bit further down first, but I think it is likely that you will see a counter trend rally at some point in the next few weeks. And you can actually look at prior seasonality for the S&P 500. Here, if you look at the S&P 500 year-to-date ROI in post-election years, this is 2025, and if you compare it to the average of all prior post-election years going back to 1928, you will see that the S&P has unfavorable seasonality really up until about the end of March. That doesn't mean that the low is always put in at the end of March, but it tends to be unfavorable throughout the first quarter of post-election years. If you isolate, just say, certain post-election years, it doesn't always play out like that. Here's 2021, where you can see the market generally trended up. In 2017, the market had sort of a lull and dropped into March timeframe, but then picked back up as we got out into the spring. If you look at 2013, you'll notice there was a little drop here in March. So a lot of the time, you actually don't get drops like this. But if you go look at, say, 2009, that was a pretty big drop by the S&P 500. You will see that it bottomed out in the first quarter of the year before then getting a sizable rally. One of the interesting things about the S&P 500, even during the pandemic crash, this entire drop was sort of encapsulated between February options expiration and March options expiration. So what I'd like to do is go back and look at some prior drops by the S&P in the first quarter of the year and just find out when did they bottom before there was at least some relief. Whether it led to a new all-time high or not is obviously a different question to ask, but let's just go take a look. We could first start off with noting where we are right now, right? So far, the S&P has dropped into the week of March 10th. So we're getting about halfway through the month. This current week that we're about to go into will be the week of March 17th. If you go back to 2022, you'll notice that there was actually a low in late February and then sort of a weakness that persisted through the week of March 14th, which is essentially the coming week. And then there was a rally back up to the bull market support band that just resulted in a lower high. And then the market trended down again in May and in June. So for the S&P 500, it's relevant to remind ourselves, where is the bull market support band right now? Well, right now, the S&P 20-week SMA is at around 59.53. The 21-week EMA is at around 58.82. So keep those numbers in mind in the coming weeks. What you'll likely see here is the S&P bull market support band roll over as the weeks go on. And at some point, you'll likely see a retest, a back test of that level. That's what I'm expecting, at the very least, at some point in the next few weeks. If you look beyond what happened in 2022, the last time we had sort of a bear market in February and March was back in 2020, where the market bottomed the week of March 23rd. Okay, so in that case, it would be another week or two from now, right, to get you out to the week of March 24th. That's how long it went down in 2020. And you can see that the downtrend started the week of February 18th. This time the downtrend started the week of February 18th, right? So you had basically a similar thing in March 2020. Now, I'm not trying to say this is a pandemic like crash. It certainly hasn't been the same extreme. For instance, at this point during the pandemic crash, by the week of, where we are right now, the week of March 9th, March 10th, the S&P had dropped about 15%. Whereas so far, what we've seen is the S&P drop about 10%. So it actually hasn't been quite as bad as what we saw back during the pandemic crash. But it does show you that it is certainly possible for the S&P to remain weak for another week or two. It's not like it's impossible for that to happen. There's plenty of times throughout history, if you look at drop, years that the market was dropping, like if you look at 2008, you'll see that the S&P 500 found a local low the week of March 17th. So that's basically the week we're about to go into, right? The week we're about to go into, that was where ultimately the S&P 500 found a low in 2008 before a rally actually above the bull market support band that ultimately resulted in a lower high. If you go back even further, like if you go back to 2000, you'll actually notice that it was sort of the opposite. The market was actually going up in March, but it actually trended down into April, into early to mid-April. So that's, when I think about how long could it take for a counter trend rally, it honestly could start at any time. If history is any indication, it's possible for the S&P 500 to go down for another week or two, maybe even into early to mid-April if it wants to follow what happened in 2000. But sometime in the second quarter, by the second quarter, I would expect a counter trend rally. And of course, then we'll have to discuss what that ultimately means for the market and what will come after that. If you look at 1997, there was a drop going into, you can see the market sort of topped out the week of February 17th, which again, this time it topped about February 18th. And back then, the market essentially trended down until about mid-April. So when we talk about how long could it take for a counter trend rally at the very least, and we'll talk about whether that could lead to new all-time highs whenever that rally occurs, I'm saying my guess at this point in time, I don't have a crystal ball. My guess at this point would be no later than mid-April, okay? And if you go back further in time, you'll find drops in the market where the market ultimately finds some strength in mid-March, right? Here's some strength in mid-March after a February drop. And then going back even further, right, you can see that there was a low here in late March in 1994. These were all part of larger bull markets. And the funny thing is, as you go throughout history, right, as you just sort of go throughout history, you'll find many times where there's weakness in the first quarter of that year, right? You'll find a lot of weakness in Q1 when you're having these pullbacks, and then you'll find renewed strength in the spring. And you could look back at some of these prior cycle downturns that we had back in like the 80s and whatnot. And if you look over here, you'll also see sort of a downturn in the markets that found a local bottom late February, early March, a counter trend rally to a lower high, and then ultimately it went lower as the year went on. But I just wanted to sort of remind people that the market, as always, is very much a stochastic process. It's going to be impossible to time every single move, right? Historically, when you look at seasonality in post-election years, it's not uncommon for there to be weakness right now. It is true that the weakness that we are seeing right now, on average, is worse than what we normally see, right? This is worse than what we normally see. If you actually overlay 2025 with what we saw back in 2020, you'll see that it's not quite as bad as where we were in 2020 at this point. But you can see that it did take another couple of weeks or so before the S&P 500 found a local low, or that was ended up being a macro low, and then it sort of built off from that. So I want people to, remain grounded. Obviously, there's a lot of discussion about tariffs. There's a lot of uncertainty. My guess is that at some point in the coming weeks, the tariff discussion will at least temporarily die down. And I believe some of the tariffs are set to go into effect in early April. So I think that some of that discussion will likely die down as, as spring approaches. And then whenever that happens, the markets will then use that as an opportunity to at least sniff out a counter trend rally. Um, and then, of course, we'll talk about what that ultimately means. But, in order, it doesn't really make a whole lot of sense spending too much time talking about that until we actually get a counter trend rally. For now, all we really know is that we're still sort of in this unfavorable seasonality time. We know there's times in the past where it's bottomed in mid-March, but there's also been a few times where it continued on for 2 to 3 weeks longer. My expectation is that the local low, is sometime around March OPEX, right? Plus or minus a week or two, right? So, I mean, it's possible that it's in now, but I think when we look back at this in a year, the local low will be seen sometime around March options expiration, and then there'll be a counter trend rally back up. And then we'll talk about what that means if and when that happens. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.